Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, February 2nd. Market-moving news was lacking this session. In turn, stocks traded with little direction and finished with mixed results. All three major indices fell to losses in excess of 1% in the early going. Only the Nasdaq was able to finish with a gain thanks to help from large-cap tech stocks. Microsoft was a primary leader in its space. It staged its largest single-session advance in more than 1 week, enabling it to reclaim losses from the prior two sessions. Large-cap industrial stocks sent the Dow to new lows for 2009. The Dow is up 6.5% from its bear market low, though. General Electric was a primary laggard in the Dow and the industrial sector, dropping 2.5%, which was the worst performing sector in the S&P 500. Shares of GE actually registered a 13-year low amid ongoing concerns regarding the health of the company's capital arm. GE remains one of the only companies to boast a AAA credit rating. Financial stocks, which have led the market in recent weeks, managed to finish a volatile session with a 0.2% gain. Financials were down as much as 3.5%. Investors continue to await further details regarding a government-led plan to help restore the nation's financial system. Though there is doubt that any such plan will spur an immediate recovery, investors are anxious to make progress. According to the Wall Street Journal, Treasury Secretary Geithner indicated he will lay out plans for the financial crisis in his speech early next week. With the health of the financial system and the broader economy still uncertain, companies continue to issue warnings and make cuts where necessary. Macy's projects lower earnings for fiscal 2009 and is cutting its dividend to 5 cents per share from 13.25 cents per share. Macy's also plans to eliminate some 7,000 jobs. Shares of Macy's dragged retailers 0.3% lower in Monday's trading. Earnings news was light this morning. Humana was one of the few widely held companies to report. It announced lower fourth quarter earnings, strong revenue growth, and reaffirmed its full-year outlook. Humana's report was largely in line with expectations. There was some economic data released this morning, but it came with little surprise. Hard-pressed by ongoing headwinds, personal spending in December was down 1%, while personal income decreased 0.2%. The personal spending data was largely reflected already in last week's advanced fourth quarter GDP report. Meanwhile, January ISM manufacturing came in at a better than expected 35.6%. The consensus called for a reading of just 32.5%. Still, the data reflect continued contraction in manufacturing. Construction spending in December fell 1.4%, which is a bit steeper than the 1.2% decline that was widely expected. The drop in December indicates an accelerated decline from the 1.2% decline registered in the prior month. I'm Pat O'Hare for Briefing.com. Thanks for listening.